Thank you for attending the LIFULL earnings presentation for the fiscal year ended September 30th, 2024. Before we begin, I would like to introduce the members of LIFULL attending today's presentation. Attending in person today are our main speaker, Representative Director, President, and Managing Officer, Ito Yuji. Representative Director and Chairperson, Inoue Takashi. Director and CEO of LIFULL Connect, Shishido Kiyoshi, and Managing Officer, Fukuzawa Hidekazu. Attending online today are Director Shimizu Tetsuro, Director and Managing Officer Yamada Takashi, and Managing Officers Hada Yukihiro, Kawasaki Kohei, and Nagasawa Tsubasa. President Ito, please proceed with today's presentation. Hello, my name is Ito, President of LIFULL. Thank you for attending our earnings presentation today. It has been just under a year since I became President of LIFULL, and this marks my first full year earnings briefing. Here you can see the table of contents for our presentation today. There's a lot to cover, so I will take the items one by one. I would like to start with the main points of today's presentation. First, the home services segment is continuing to recover and created a solid foundation for its further growth. Second, we have made the decision to move forward with the strategic transformation in the overseas segment. This marks a significant change in our policy so far, so I will give an in-depth explanation later on in this presentation. Finally, the fiscal year ending September 30th, 2025 is already underway, but this also marks the final year of our midterm management plan. We will be focusing our management resources on growth in our domestic businesses to reach our operating profit targets, which we have disclosed in the past. 5 billion yen of operating profit in the consolidated LIFULL Group, and 3 billion yen for non-consolidated domestic LIFULL Co., Ltd. We have not altered these targets and will continue to make progress towards reaching the operating profit targets this year. Next, I would like to move on to the consolidated summary. Consolidated revenue amounted to 34.4 billion yen for the fiscal year, a 5.3% decrease over the previous year. However, as the graph on the right shows, the 36.4 billion yen in revenue in the previous fiscal year included several one-off gains. There were gains from the Regional Revitalization Fund amounting to 2.5 billion yen, as well as revenue from LIFULL Space, which was sold during the second quarter of the fiscal year under review. Removing these gains, we are left with 33.7 billion yen, meaning that revenue effectively grew by 690 million yen, or 2.1% YOY. The main factor of growth here was growth in the domestic Japanese home services segment. Next, we will take a look at consolidated operating profit. We ended the year with an operating loss of 3.2 billion yen. In the previous year, we had a profit of 1.8 billion yen, so this was a decline of approximately 5 billion yen. One factor here is an impairment loss of 3.8 billion yen for the overseas segment. On the next slide, we'll take a look at these numbers in more detail. Here I'd like to provide you with a closer look at operating profit and loss. There were a number of one-time gains and losses during the fiscal years 2023 and 2024. These factors make it difficult to compare the years directly, so we have provided a chart for better comparison. In the fiscal year ended September 30th, 2023, as on the previous slide, we recorded a profit of 1.8 billion yen. However, this 1.8 billion yen includes the sale of shares of Rakuten LIFULL Stay, as well as the sale of assets of the Regional Revitalization Fund. Additionally, there were one-off costs that also affected the results, such as the recalculation of the earnings-based payments for the acquisition of Fazwas. Removing these factors, operating profit for fiscal year 2023 would have amounted to 1.47 billion yen. For fiscal year 2024, on the other hand, we recorded a total operating loss of 3.2 billion yen. However, this loss includes gains of 910 million yen from the sale of LIFULL Space. Items 2, 3, and 4 refer to losses in the overseas segment, such as an impairment loss of 3.8 billion yen, a loss of 870 million yen for the recalculation of the earnings-based payments for the acquisition of Fazwas, and 160 million yen in one-off costs for the transition to a new management structure. These factors amount to a decrease of 740 million yen in operating profit between this year and last year. On the next slide, I would like to discuss shareholder returns for this year. Since the fiscal year ended September 30th, 2018, we have maintained a dividend payout ratio of 25%, and we plan to pay dividends at the same ratio this year as well. Please note, however, that we have removed some of the one-time losses resulting from outstanding circumstances from the calculation of dividends. As a result, we have forecasted dividends at 0.73 yen per share and will add this agenda point to the general meeting of shareholders with an official release on November 25th. Over this next section, I would like to discuss the results of each segment. First, for the Home Services segment, we have 3 main points to share with you today. Revenue for the Home Services segment has increased 3.4% YOY, an acceleration to the current growth trajectory. The reasons behind this are related to point number 2. We have seen growth in inquiries to our clients, which shows the growing media capacity of our services. Finally, we will continue to make proactive investments to grow revenue and profit during the fiscal year ending September 30th, 2025. As a result of our initiatives, the Home Services segment ended the year with 24 billion yen in revenue, which, as I mentioned before, is a 3.4% increase YOY. Segment profit amounted to 2.6 billion yen, a slight decline of 3.8% YOY, which is due in part to increased hiring and improvements to our sales initiatives. However, we plan to make up for these investments during the fiscal year 2025. I would also like to draw your attention to the right-hand side of the slide. Here you can see a quarterly comparison of revenue. Over the course of the year, we have seen accelerated growth over the same quarter in the previous year. The new fiscal year already started in October, and we are not seeing a slowdown in growth and anticipate that Home Services will be the driving factor for achieving the 3 billion yen target in operating profit that we have set for our midterm management plan. Next, I would like to touch on the background of some of the positive developments we are seeing in the Home Services segment. First, organic traffic has been increasing as a result of the initiatives we have taken over the last year. As you can see in the image on this slide, as total traffic, and more importantly, organic traffic increases, we also see an increase in the number of inquiries we are sending to our clients. Our inquiry-based business model is one of the characteristics that sets us apart from our competition. That means that growth in inquiries directly translates into revenue growth for us. We can then reinvest our earnings back into further developing the services we provide on our website. Therefore, keeping this flywheel in motion is one of the current strengths of LIFULL Homes. Over the next several slides, I will give you a simple overview of what is happening at each stage of the process. On this slide, I will discuss more about the actions we are taking on traffic acquisition. We are constantly fine-tuning our website with new developments almost every day. These efforts, combined with our increased sales initiatives, are translating into stronger traffic acquisition for us. We are balancing both continued developments to our platform and products while also promoting these through increased sales initiatives. Looking at the development side, we are working to further personalize the experience of each user on LIFULL Homes. We are accelerating the PDCA cycle and seeing continuous improvements in both the user interface and experience. The numbers also reflect these results. In some cases, a single product or service can undergo several dozen improvement cycles within one single month. This means that our site is evolving on a daily basis, which boosts the attractiveness of our site, and we are promoting these positive developments in our enhanced sales efforts. Our network of clients has also increased as a result of growth in our sales teams, which also means increased revenue and more diverse listings. This is just an example of our positive results, but the number of real estate professionals listing on LIFULL Homes has grown by 6.8% YOY. As I mentioned before, however, segment profit was down slightly by 3.8% YOY. However, I believe the investments we have made will help us achieve our targets in fiscal year 2025. On the next slide, I would like to talk about how the growth in traffic has affected inquiries. Inquiries via LIFULL Homes have increased YOY. Within the LIFULL Homes website, we offer several categories such as rentals, new builds, resale homes, custom-built houses, and several other related categories such as home appraisals. Essentially, the number of inquiries is increasing in all of these categories, which means that we are recovering well. One good example of this is home appraisals. This is a service where users can contact multiple real estate professionals at once to get a quotation on their home. Our cycles of improvement have been progressing smoothly, and we are seeing considerable growth in inquiries to our clients. These improvements are being promoted by our sales teams, so the changes we are making to the website are directly translating into revenue growth for us as well. We are not only seeing improvement on LIFULL Homes, but also in our subsidiary Cambia, a website for investment real estate in Japan. Here too, we are seeing significant growth in incoming inquiries. Originally, we also offered listings for investment properties on LIFULL Homes, but over the last 2 years or so, we have combined the investment property databases of LIFULL Homes with Cambia. So now, if a real estate professional lists their properties on Cambia, these listings also appear on LIFULL Homes. This increase in reach means more incoming inquiries for our clients. Here too, we are enhancing our sales initiatives to increase the number of listings to make investment real estate another characteristic that sets the LIFULL Group apart from our competitors. In addition to our development and sales teams, we are also working to improve the profitability of the home services segment by increasing the effectiveness of our advertising efforts. Over the last 10 years, we have continuously monitored, analyzed, and tuned our advertising spending. Currently, advertising for homes can be divided into 2 main categories. The first is branding initiatives to increase brand awareness, such as through television commercials and YouTube ads. The second category is paid traffic acquisition, as noted on the right-hand side of the slide. Within this overall structure, we are always launching different campaigns for homes. For each of these campaigns, we monitor the results daily and use AI to analyze the results of each media channel and each region to fine-tune our budget allocation and to maximize our overall returns. Our constant learning has led to an ever-evolving portfolio of sophisticated and efficient user acquisition methods. With each year, we are able to achieve even better results with the same advertising budget. This is a key point to our overall profitability strategy. Next, I would like to move on to the results of the overseas segment for fiscal year 2024. Here too, we have 3 main points. First, we will look at the impact of the performance of our aggregation sites. Then, I will explain the background of the impairment loss of 3.8 billion yen. And finally, I will share more information about our new course of strategic transformation for the segment. The overseas segment ended the fiscal year with a total of 8.1 billion yen in revenue, and a segment loss of 1.4 billion yen. As in our growth strategy, we saw improvements in the revenue from our direct services. At the same time, though, our aggregation sites have remained impacted by external factors, resulting in a slight decline in revenue YOY. On the right-hand side of the slide, you can see a breakdown of the segment loss. Of the 1.4 billion yen loss for the fiscal year 2024, approximately 800 million yen was from the decrease in aggregation revenue, while another 600 million yen was from other elements including currency fluctuations and other one-off costs throughout the year. Over the last year, we've been attempting to accelerate the overall recovery of the overseas segment with a new management team led by Director Mr. Shishido. Looking back, in January 2024, we transitioned to this new management team to recover the profitability of the business. The new management team implemented a recovery plan in March, with recovery in some parts of the business in June. Since the founding of LIFULL Connect, we have been following our strategy of moving to direct. As a result, we have seen growth in our direct services. At the same time, though, we have implemented a recovery plan for our aggregation sites with partial success. However, we have been increasingly affected by external factors, which have caused a continual decline in organic traffic, resulting in a decline of revenue for the segment. You can see a representation of revenue from the 3 different types of services that LIFULL Connect offers. The orange section represents aggregation services, the yellow shows real estate portals, and the blue is the tech-enabled real estate agency. In our overall strategy, we are pushing for growth in the real estate portals and tech-enabled agency, and revenue has been growing as planned. However, revenue from our aggregation services has been declining at a higher rate. On the right, you can see a selection of some of the initiatives we undertook as part of the recovery plan for the aggregation sites. We saw particularly positive results in the average cost per click, with prices growing by 10% due to the introduction of new products to our clients. Additionally, the average number of clicks per user also increased by 2.6% as a result of adjustments to our user interface and experience. As you can see at the bottom of the slide, though, organic traffic declined beyond our expectations, ending the year with 37% less visits than the previous year. We attribute this drop in traffic to a number of external issues, including changes to privacy laws in the European Union, as well as updates from major search engines. As a result of these external factors and changes in our business environment, revenue from our aggregation services declined over the year, creating a gap to our original business plans. For this reason, we have recorded an impairment loss of 3.8 billion yen on our assets in the overseas business and have made the decision to focus our management resources on growing our domestic Japanese businesses moving forward. I will discuss more details on pages 28 to 33. Finally, we come to our other businesses segment. We ended the fiscal year 2023 with 4.9 billion yen in revenue, but this included both the sale of assets by the Regional Revitalization Fund as well as revenue for the second half of the year for LIFULL Space. Removing these items, revenue would have been 2.29 billion yen, or about the same level as the 2.28 billion yen result for the fiscal year 2024. We had a segment loss of approximately 200 million yen in the previous year, but this also included one-time gains. Removing these gains, the segment loss would have been approximately 600 million yen. This means that we effectively improved segment loss by 190 million yen. Next, I would like to move on to the results forecast for the fiscal year ending September 30th, 2025. Please be aware that this forecast does not reflect the strategic transitions we are undergoing in the overseas segment and will be subject to revisions once we have confirmed and disclosed the details of the transaction. We forecast total consolidated revenue of 38 billion yen, with 3.5 billion yen in operating profit and 1.9 billion yen in net profit for the period. You can also see the breakdown of revenue by segment on the right-hand side of the page. Moving on to the next section, I will talk about our growth strategy for LIFULL Homes during the fiscal year ending September 30th, 2025. As I mentioned earlier, we are experiencing robust growth, and to maintain this positive momentum, we are committed to continuing our current initiatives, which form the cornerstone of our strategy. To achieve this, we aim to effectively drive both core aspects I mentioned before, development and sales initiatives, to drive growth both on our site and in revenue. Particularly in development, our efforts to personalize the user experience have started to perform exceptionally well, so we plan to remain on the course we originally charted. In conjunction with these site developments, we have also invested in expanding our sales teams and intend to ensure that these investments show results over the next year. We also aim to continue to expand our client network while providing more value to our clients and improving average revenue per agent, or ARPA. Additionally, we've also been focusing on creating a stronger internal structure to support this growth during the new fiscal year that started in October. I personally continue to serve as the head of LIFULL Homes Business Department, but I'm also joined by our Chief Creative Officer, Kawasaki Kohei, and from this year, Chief Technology Officer, Nagasawa Tsubasa, as deputy department heads. We decided that this would be the optimal structure for us to drive the introduction of new technologies such as AI and generative AI into our products while also supporting the digital transformation of the real estate industry as a whole. With this robust structure, we aim to firmly push towards achieving the operating profit target of 3 billion yen for non-consolidated LIFULL set in our midterm management plan. In the next section, I would like to walk you through the strategic transformations on which we are embarking for our overseas segment. To begin, I would like to start with some background on the strategy we've implemented for LIFULL Connect, our main overseas subsidiary. We started with the acquisition of Trovit in 2015, followed by the acquisition of the Mitsula Group in 2019. Then, we established LIFULL Connect in 2019 as a holding company overseeing both of the businesses of these acquisitions. At this point, we also established our growth strategy for our overseas businesses moving forward. The overall strategy for LIFULL Connect is moving to direct, which refers to our shift away from the aggregation businesses of our acquisitions to business models which are closer to the actual transactions and, in effect, the local real estate markets themselves. As we have made progress towards this strategy, we made several other strategic acquisitions in order to grow our direct services. Revenue from our aggregation sites, on the other hand, though, has continued to decline over the last several years, resulting in a segment loss of 1.4 billion yen for fiscal year 2024. On the right, you can see the annual revenue trends from the fiscal year 2021 with the mergers and acquisitions we underwent in each year below the graph. One of the major turning points for us were the acquisitions of Fazwas, a tech-enabled brokerage in Thailand, and La Moody Mexico, a major real estate portal in the region. With these acquisitions, revenue from our direct services increased significantly, accounting for nearly half of all revenue of LIFULL Connect. However, the decline of aggregation revenue has caused a downturn in the overall profitability of the business. For this reason, we have made the decision to move forward with the strategic transformation on the overseas business, which allows us to focus more on domestic growth in Japan with LIFULL Homes. Over the next several slides, I will give you more details of what these transformations will entail and what we actually mean here. We are currently in negotiations to pass day-to-day management of LIFULL Connect to the founders of Fazwas, which has been one of the drivers of the current growth within the business. Fazwas has become a leader in the promotion of the digital transformation of the real estate industry in Thailand, thanks to its highly experienced and talented management team, with a clear track record of success. On the right side, we've provided a year-on-year comparison by quarter of revenue growth for Fazwas. The current business is structured around real estate transactions, so there is some volatility between the quarters themselves, but the business has shown clear growth with revenue nearly doubling in the fourth quarter. One of the factors for the success of Fazwas is in its management team, who have honed their skills and experience in real estate, finance, and e-commerce. Next, I'd like to give you an idea of how we plan to structure this transaction and how the business might be structured after completion. As noted at the top of the page, the final structure is still under negotiation and subject to change as discussions progress. In short, we plan on transferring shares of LIFULL Connect to the founders of Fazwas. In return, the payment LIFULL is required to make to the founders for the acquisition of Fazwas will expire. Therefore, in the end, LIFULL Connect will leave the scope of consolidation of the LIFULL Group, reducing further risk to the management of LIFULL. The overall structure is rather complex, so we have simplified the overall image for this presentation. As of now, LIFULL currently holds 100% of the shares of LIFULL Connect, and thereby maintains all of the management rights. At the bottom of the left image, we have Property Thailand, a 65% subsidiary of LIFULL Connect. The remaining 35% of shares are held by the founders of Fazwas, and LIFULL is required to make an earnings-based payment for the acquisition of these shares. The structure on the right-hand side of the slide then gives a simplified view of the overall structure after the transaction has been completed. LIFULL will go from being a 100% shareholder of LIFULL Connect to 55% in preferred shares without voting rights and swap the remaining 45% with the founders of Fazwas for their shares of Property Thailand. So in the end, Property Thailand will be a wholly owned subsidiary of LIFULL Connect, and the founders of Fazwas will have management rights of the entire LIFULL Connect business. As noted at the bottom of the slide, LIFULL Connect will be then removed from consolidation and become a pure investment of the LIFULL Group. The earnout payment for the remaining 35% of Property Thailand will also expire. However, as I mentioned before, this is all still subject to negotiation. The next slide will help you give you an overall idea of the schedule moving forward. We are currently in negotiations with a target of signing the finalized agreements during December 2024. After that, we expect that LIFULL Connect will be removed from the consolidation of LIFULL after January 2025. Additionally, should this transaction happen as planned, the expiration of the earnout and removal from consolidation of LIFULL should have a positive impact on profit for the entire LIFULL Group. As of yesterday, we already signed the basic Memorandum of Understanding and are now moving forward on the final negotiations for the agreement to sign in December. From January, we will then move forward with the share transfer and revise our earnings forecast for the remainder of the fiscal year. Regarding the impact on profits from January, we will disclose the details promptly after they have been finalized. The basic components, however, are listed on this slide and include the expiration of the earnout and changes from the loss of management rights of the company and decreased losses from the consolidation, which we expect to positively impact our operating profit. Additionally, we expect a certain amount in taxes for the transfer to affect the overall net profit. We are currently calculating and confirming these amounts and will disclose the final expected impact and revise our earnings forecast for the market as soon as possible. Here we've provided a representation of parts of our current midterm management plan. As mentioned before, we are not revising the overall midterm management plan itself and will continue to work together to reach the operating profit targets we have set to achieve. Additionally, we expect that the positive effects of the strategic transformations of LIFULL Connect will also aid us in reaching the consolidated operating profit target of 5 billion yen in the fiscal year 2025. At the same time, we plan on reaching the 3 billion yen target for the non-consolidated LIFULL by keeping LIFULL Homes on its current growth trajectory and increasing revenue from our domestic businesses. This brings me to the final part of today's presentation, the implementation of a restricted stock plan for our directors. We are currently considering the implementation of a restricted stock plan into the current compensation packages of our directors. The proposal is scheduled to be formally presented at the General Meeting of Shareholders on December 23rd. There are three main objectives of this proposal. We hope to incentivize our directors to further drive value creation over the long term. We also want to ensure their commitment to the share price and market position of the company overall. And finally, we want to ensure that the interests of our directors are aligned with those of our shareholders. We expect to implement this plan for internal directors of the company within the current remuneration limits of 100 million yen per year and up to 650,000 shares. As noted at the bottom of the slide, we are not proposing any changes to the amount or calculation of director remuneration. To give you more insight as to what this means, we are not increasing the remuneration of our directors. Rather, we are adjusting the form in which they receive that remuneration from cash to a portion paid in restricted stock. That concludes my presentation for today. Please refer to the following pages of the presentation materials for the financial statements for the fiscal year and the appendices for additional information about LIFULL as a whole. I thank you for your attention today and would like to end by letting you know that we remain committed to achieving the operating profit targets of our midterm management plan. Thank you again, and I look forward to your support over the next year.